for those who are going to miss it. All right, it's in record. We're missing one more person and we're good to go. All right, let's give that person 2 more minutes. So we don't come to trend trade and intraday. Yes, yes, yeah, yes, Sile, correct, correct. So you see how in USD Japan, let's look at the live chart real quick. Where's USD Japan? USD Japan, right? To me, this is level 1. Everyone sees levels different. Okay, like that's normal. Everyone sees levels different. You see how they did an M. Remember, we don't counter trend trade on intraday level 1s. Why? This was not. And remember what I said, that this is not even a multi-session. This is a half-dash M. Okay, this is a half-dash M, and they came here, and this is no good. It probably good like for 2 to 5 pips, but for what, you know? This would have not been good. We don't counter trade this. We expect something like this, either this and come here. The trade would have been good if they pinned the low and came back right back up it immediately. You could have actually even put more contracts in here if they would have came and pinned it and ended the railroad tracks. You could have added more contracts here. But what did they do? V. They did a V over here. What is a cycle? W, V, V, M. However, I did not identify this though. So darn me. But yeah, so this is what I mean, okay, Sile? And look again, over here, same thing. 1, 2, and look again, remember? And then they price rose up again. This is why we don't counter trend trade on 1 or 2. Okay? All right. Let's keep going. So yeah, so this was the GBP JPY. Another one. Let's go look at this other trade I took. Okay. On this occasion, remember how I said that you won't always get 3 levels of intraday? This is an example. I still remember this trade I took. GBP JPY came. They did 1, 2, and look what they did. They just did this little thing to complete like some W, some crappy W over here. However, this trade, I mentioned it earlier on the lessons, but this trade is called the cow law reversal. Yes, cow law. That means when all the candlesticks are like this, lined up like logs. Okay? They're all lined up like logs, up and down, up and down. Green, red, green, red, green, red. However, to confirm, I confirmed with 3 candles. You see how my entry was here? I knew I was good to go. 3 solid green candles coming out already. The trade would have been safe. Took it right here. And look at this. Price rose aggressively coming out of level 1. Remember? Level 1s and level 3s are the most aggressive moves, right? Level 1 going into level 2. Remember? Remember, Sile, we don't counter trend trade on level 2 intraday. Look what they did. This looked good. Oh, railroad tracks, they hold the level 30 to 90 minutes. Man, it's good for a short. No, you're wrong. And we don't counter trend trade level 2. And look what these bastards did. They rose price aggressively out of there. Look at this. Look at this. This is why I held my buy over here, my entry over here. This is 139. Man, they rose price like 250 pips. Beautiful, beautiful. Let's see. That same trade had me confused. I was going long because of it. Yes, Sile. I was actually going long on that one too. So it's okay. It's okay. However, I didn't check the laptop again to see how it was playing out. And then I didn't even know news was there. Remember how news complete the pattern? So I didn't check this area no more. After I didn't check it, I didn't see what happened here. I just woke up, saw this aggressive move. I was like, holy crap. But yeah, see how here they held the level? This is where we got in. This is where we got in yesterday, somewhere around here. We got in here. They pulled back and consolidated. I was like, this trade is not looking good no more. Because if it was a level 2, it would have been pushed up, and they didn't. They held the whole level until New York, and then they started dropping. Possibly, if I would have seen this, I would have probably entered over here a little late because of that. After all this chop would have got me a little like, man, like hopefully, it this time it corrects, because it was a 2 days, two to three levels, right?
Yeah.
Yeah.
Oscar? Oscar?
Yes.
Just on that same trade, where I'm not sure if I had it right or wrong, but I was looking at the pivot points, right? And when I was looking at the pivot points, it was actually on M3. So as much as I was saying to myself that I'm thinking that we're going long because of that water and mayo crossover the day before.
Yes, correct.
As soon as I saw that on the pivot point, it was on M3. I was already telling myself from what you told us that it's going to be an M3 M1 day, which means it's going down.
Yes, correct. Yes.
But my only issue was I couldn't convince my mind to say we're going to go down now, because I was busy telling myself that look at those moving averages. Moving averages are saying we're going up. Look at that blueberry. That blueberry is going to hold as support.
Yes.
Definitely going up. Look at the only other thing that was telling me that we're going down was the TDI, because the TDI kept showing me divergence.
Okay, yes, divergence here and divergence like this, right?
Okay,
gotcha.
So it was one of those trades where, to be honest with you, I got out of this trade very early.
Okay.
Going long, because I sort of took myself out of the trade and I said, nah, I don't really think it's going up, but at the same time I'm not going to put money on it going down.
Okay, it's all right. See, keep in mind, remember how there's always variation on the team, and these guys always got new tricks, but as long as we can identify these areas, this is going to help us as an experience for next time. Whenever there's a crossover like this, a 3 days of rise, and then a M3 here. Let's look at the. Oh darn! I don't have the other app open. I'm sure that there was an M1 pivot or something around here. I know there was some pivot around here.
Yeah, no, it definitely hit that M1. Yeah, it did.
It did. Oh, okay. See, wow, crazy. But yeah, see, like that's what I mean. Okay.
Okay.
All right. Okay, so yeah, this trade very important, guys. Okay, the up and down after 2 or 3 levels of intraday, this is good to go. Remember counter trade, good. And then remember what I told you about Euro USD, the trade we looked at, the 33 trade that was coming like this. This is the trade I took on NFP. This trade right here. You see this fake W? You see this fake W and the Mayo is right there. Oh, it should be good. It should be good to go long. Yes, it would have been okay, but we want the bigger movements, right? Actually, you could have probably taken this to the Mayo, actually, but news was close, so we don't risk it in the news. So how did I know though? Remember what I said? I expected another A soon, and they, excuse me, and they bottom because price was coming here, and then look what they did, A, and then dropped massively too, massively. Drop price and drop, and then pull back and consolidated. Ended the consolidation on Friday. Okay. Let's see what we got here. It went from ADR high to, oh yeah, exactly. See, another good observation. Yes, Mundo. Yes, good observation. Oh, and thank you by the way on that oil trade, on that shark fin, on the volatility bands. Thank you, Mundo. Good eyes on that one. Let's keep going, guys and girls. The straightaway continued. Okay, Shorty, remember what I said? That they don't come to this area again? So this is actually the same chart we showed, but this is on the phone. You see, remember what I said, that they spiked it? They spiked this area and came back immediately? This was all chop. Anchor point was somewhere around here. They did this, spiked the bottom, the low, and came back aggressively. You remember? We don't counter trend trade here. Look what they did. They rose price aggressively again. I took a buy here. I knew this was a fake gam. Went up and went up. Here, USD Japan. Price was coming up. What did I expect? The A bottom. They gave it to me. However, my entry was a little late because I started seeing this chop on my but I still took it. Remember, confidence is key. Confidence is key in these trades, okay? I took it, put a 5 cent, a 35 cent, bam, monster drop. Monster 1, 2, 3, 4, 5, 6 handlebars of drop on this trade. Beautiful. Beautiful. Good for like, on USD Japan, good for like, I don't know, like 80, 85 pips, 85, 90 pips. Dropped around here, then they pulled back aggressively, and then they dropped. Okay? Yeah, of course, Mundo, of course. Let's keep going. The straightaway. All right, guys. So I showed this picture, I believe, already, but here it is again now for our purposes on levels. Right? Remember consolidation. Price has been going like this, possibly, or price was going like this, depending, right? Okay. Let's just say price was coming up. No, let's say price is coming like this, okay? All right. Look at this consolidation. Level 1, remember, we don't trade, counter trend trade. Look at this, consolidate, level 1, confirm, drop, and then this fake W would have possibly gotten us. Identifying level 2, intraday is key. Remember, we don't counter trend trade on intraday levels. This would have got here. Oh, you know, they okay. Let's just say there was a pivot here. Let's just say there was an M2 pivot here. Okay, this is the line right there. Oh, it pinned the pivot, came back up, and then they did this. Oh, and it ended in a hammer. Oh, it's good to go. No, it's not. This is level 2. You don't counter trend trade on level 2, intraday. And look, they dropped price again. And what I expect chop, right? In level 3, intraday. All right. I can never enter a trade on level 3 because hardly ever. Exactly. See how in the pictures I showed earlier, they don't they don't move. You see, they possibly just do this, confusing us, right? They don't do a lot of stops, and they just do this, and then they drop. But I noticed, however, let's go back to the other picture. I noticed though, look at this though. However, I noticed that on level twos though, they do this. Look at this. Level two, same pairs, different days, just to show you. 14th of July, 20th of July. They didn't do a lot of stop hunts. But we knew this would have been good. If your entry would have been a little late, that's fine because you know this is level two. So you have nothing to worry about, okay? Same thing here. Same thing here. Nothing to worry about. Okay. But yes, the straightaway trade is a very difficult trade to master. But once mastered, this will also add success to your trading. I know a lot of you guys have gotten trapped here before. I know I have. I'm no exception. I'm no exception. Okay. And I possibly learning the market maker method, I would have taken this M. Knowing myself, yeah, I would have taken it. Okay. So I'm a victim here too. I would have taken it, got stopped out right here, price went up. It's all patience. It's all patience. All right. Okay. All right. Levels. This is one of the most difficult topics in the method. Once mastered, will also add success to the business. There are intraday levels and weekly levels, which I'll talk about, are very important to know where you are in the overall market cycle. Avoids you counter trend trading and avoids you getting stopped out. All right. Continue. This is a picture I showed Mundo, I believe. For those that use Elliott Waves, this is when levels start getting in handy. All right. The guys that do Elliott Waves, they do the A B C D projection. A B. They did 50, and look what they did. They reversed immediately. They're like A B. Oh crap! But look at this. W 1 2 3. What do we expect? A reversal, right? We expected a reversal after level 3 in the intraday. We expected this. What? Drop, got these guys stopped out. Beautiful. Let's see. So mute the mic. Okay, let me see. Give me a second. All right, give me a second. Let's see who's mic. I need to mute. Everybody's. Oh, I see. I see. All right, Gio. Thank you. Thank you. I appreciate you, Gio. Thank you. All right. So yeah, yeah. You don't use all those harmonic stuff. Yeah, me neither. This is why I don't use them no more. By the way, the scanner did blow my account in IML. So yeah. But anyways, yes, this is why we don't use these. All right. This is why where the levels start start getting in handy. Yeah. Yep. All right. Let's keep going. Levels continue. Project and anticipate. Project and anticipate. This is going to be a little more difficult, but like I said, once mastered will be really, really important. Okay. So I know some of you guys have seen my setups on the phones before. You're like these boxes. You're like Cash. What the hell is all this? It's look like all these Skittles, all these rainbows. You know. Well, the reason I use these is to help me identify the levels. So remember M. Oh, remember this trade I told you? This was the M3. This was on lesson 2, the M3 and the M1 day. Remember what I said that your exit is here? Why? Because this is an M3M1 day. It does not go over past that unless it breaks this area and goes to the M, I believe is a M0 down here. This is where you would put your trading stop somewhere around here and hold it and hold it and hold it. Hit this area, take your profit here. But anyways, this is the same trade. But look what they did. They corrected aggressively. And what did I expect? The cycle repeats again. The cycle repeats again. So 1, 2. I had my entries. I got in super late, but I knew this was gonna pay off. I knew this was gonna pay off. This was gonna go to level 3. I knew it. Let's look at the next. Let's look at what happened next. So 1, 2. Look what they did. Yes, they went to level 3 as I expected. See, my trades are still there. Just to show you, I have my trades still in there. Okay. You see, I expected this, and now what do I expect next? Reversal, back into the range, back into the range. And remember, they're not in the business to let these guys go. I expect this. All right. All right. Let's keep going. Oh, before we get to this, I had one of my students ask me that what should we look for before getting into a trade? Now, I'm actually going to tell you right now. I actually wrote these down. So so this one's for you and for everyone else also as a class. So what do we look for in a trade? I don't have these written down, so on any slide, so write them down, okay? Or since this is recorded, you can listen to the recording later, but write it down if you want, all right? So what do we look for before entering a trade? This is a good question, actually, by the way, all right? Which actually I'm going to have to cover. All right. Scan for proper channel size. What channel size? What the hell you mean, Cash? Channel size. Remember the Asian range? The Asian range, remember? 50 pips or less is a good range. Let's go look at, let's just say this one. This is what I mean, range. You see how this one equals 46.2? This is what I mean. This is what I mean by the Asian range, all right? This is what I mean. Oops. Where's my, okay. This is what I mean. 50 pips or less is good. I'll show you what I mean by it right now. This is a good Asian range, okay? 50 pips or less. Next, what do we look for? All right, Cash, so what do we look for, man? Look for the breakout, the false move. Remember, lesson 2, the 3 swipes to the high or low, the vectors, 1. Remember how I said that they can come in 3 and 2 and 1 or in 20, right? But usually it's 3 vectors. 3 vectors to the low, LOV. Remember, Asian range less than 50. Okay, Cash. But so what if it's blown? What if the box is blown out, man? Like, what if it's like 108? Okay, look, if it's blown out. Okay, let me take some of this out. All right. If the box is blown out, let's say, oh man, it kept going down the box. Sorry. Okay, let's say the box. This is the whole box. Box is blown out. Let's just say this is a GBP JPY pair. 138 is the range. You know these GBP pairs are crazy, by the way. For those who trade these pairs, the box is blown out. Usually, when the box is blown out, you expect the correction. On this instance, let's just say price was dropping, the box is blown out for 138 when actually it's supposed to be for 50 pips. That's okay, all right? That's okay. However, the signals must present. What do I mean by the signals? What do you mean, Cash? The same thing we talked about since lesson 1, the reversal, W out of the Asian box. Let's say they give you 3 vectors. That's gold right there. To make it complicated, let's just say they just give you one red candle. There's variations on the theme, okay? They could do this, and then they could railroad track like this again, and then they consolidate. Remember the timing, 30 to 90 minutes. Also, the LOD must hold the whole time, all right? The LOD must be here, or a pivot or something strong, or a blueberry, like on USD Japan, see, like, like on USD Japan. You expect either this, a W failed to take out this area, blown out box, price has been going down for so much, for especially after a blown out box. This is okay to trade. This is okay to trade because they must correct after an aggressive move. The market does not go up and up and up forever without correction, right? Or up, down, down, down without correcting. It must correct. The market moves up and down, up and down. So this would have been okay. I'm sure there would have been a piece of water usually follows this. After a while, water's over here, mayo somewhere around here, right? So first take profit around here, second take profit. You would have put a trailing stop here. Price would have kept going. Just in case it doesn't hit the mayo, that's fine. If you go to sleep or something, price decides to go back down, your trailing stop is here. You're okay. However, keep this in mind. If this LOD breaks, you don't trade this. You're out. Scratch yourself out. Scratch yourself out of this trade, all right? We're not in the 50-50 business. We are in the 90% plus. We're not here to gamble, guys, okay? We're not here to gamble. If price goes here and then it just hangs around here, it should hold, man. You know, the LOD is here. You know, no. Scratch yourself out. Look for another trade to enter, okay? I don't want you to sit here. Remember, we're not here to babysit trades. We're not here. We want to get the second leg M or W at laser accuracy. Get your 50 plus pips or 25. Get out. And once we're more a little advanced, we can start learning the intraday swings and so on and so forth. All right, guys? But for now, I want you to take second leg M's or W's. And once you master the straightaways, it's okay to take. You know, this is going to be a fake out over here. Let me get some of this out. It's getting a little ugly, by the way. Remember, we take laser accuracies here, trades here. And once you learn the straightaway and your levels, you can take a trade here, sell, do this, and then drop again. Level 2, same thing. You know your levels now, and so on and so forth. All right? All right, let's keep going. I told you this was going to be a hard lesson, by the way. So if you have to watch the recording, I'll have these on. I'll give them to Steven later, all right? So you can see these again. All right, let's keep going. Hold on, let me see. And what if it's out the Asian range? Yeah, that's what I just said. Remember what I just said? If it's out of the Asian range, the box is going to move with it regardless. Let me get some of this up. Don't say. Let me show you an example, by the way, and then let's just look at a USD. You see this? You see this box blown out? This box is blown out. This box is blown out. 71 pips that's blown out already. Remember, 50 Asian range is good. All right, this box is blown out. Shadow box, water, straightaway trade. Price has been dropping. This is good to take right here. This is good to trade into the water over here. Straightaway, good. This has been good. Your exit would have been here, somewhere around here. Somewhere around here. Okay, good. 25, 30 pips. Okay, let's see. My biggest challenge. Give me a second, guys. Let me read this. It's on level 2 or level, and missed out on the reverse short continuation. Yes, we still have more to talk about on the levels. So So don't worry, okay? Don't worry. We'll get to those. We'll get to that. We'll get to that question. All right. We still got more. We still got more to talk about on that. Okay. Next. What's next to look for in the trade? Has the market maker held the level for 30 to 90 minutes? Has he, or 2 hours maximum? Has he held this area for 30 to 90 minutes? Actually, this area, not this. Scratch this out. This area, starting from here. This is where your clock starts, all right? Once the first leg is formed, this is when the clock starts ticking, all right? This is when the clock starts ticking. If it's 30 to 90 minutes, like I said, remember what I said? If they don't move in 2 hours, they're still sitting here. Don't take the trade. Scratch yourself out. Look for another trade. If they hold it and then they do a hammer or some movement here, railroad tracks, a morning star or something like that, and it's in the 30 to 90 minute Asian box here, come around here. This is good. This is good. The timing element was there. The second leg failed to take out the HOD or whatever is there. Blueberry, Chile. I'm gonna keep on messing on you with that blueberry, by the way. But yeah, HOD of blueberry or something like that. Here, this is good to go. Moving averages. Let's say prices dropping. Rising. There should be some moving average over here following. Remember following. They follow price. They follow price. First take profit water, second mayo. Same thing on the down. This is for you also. This is for you, Shorty. When you said price, if it goes up, or if we want to trade on the down like this, all right? Same thing, same thing. These are the same take profits, all right? Regardless where price is at, all right? And if there is no moving average, just start adding trading stops, all right? Add trading stops to your orders. But most of the time, there will be a moving average here, all right, on your reversals, all right? Next, did he come back for more? Did he on this occasion? Yes, he did, right? He did. He came back for more. What I mean by more is getting the stops, getting these guys that do buy stops, getting these guys trapped. Did he come for more? That's what I mean. Next, if all these criterias are on the go that I just said, scan for proper channel, check. Look for the breakout, false move, 3 swipes, check. Wait for the LOD, HOD to settle. Let's just say it's here. Okay, you got that there, check. Is the pattern present? What I just said, spikes, hammers, if that's present, check. Did he come back for more? Did he come back for a second leg? Did he come back and do this and do another third leg, a triple top, and still failed to take out this area? Remember the example I showed you on the trade on AUD USD, failed to take out the high like 5 times? The trade was still good as long as it didn't take it out, remember? They can do this. They can do this. As long as they don't take this area out, it is still good to go. It's still good to go. All right? And next, what's the next? You got that? That's check. What's next? Place your entry. You get some of this out. Oh, it's gonna take forever. Hold on. Let's save. Remember what I said on lesson 2? Remember what I said? Here, either M, shorty for you, W or M. Come here. Oh, excuse me. Okay, screw it. This is the Asian range. They come here. They come down here. Your stop loss is here, 23 pips on the W, M 23. Your entry is either here or here, so on and so forth. All right, and you take your entry. All right, and a trailing stop of, for us, I'll use a trailing stop of 20 pips. 20 pips. Put a trailing stop when all these criteria have been checked out. Start adding trading stops once you're in profit, all right? I don't want you to lose profit. Price comes back down. or something, an earthquake in Europe, or a freaking bombing somewhere else, and they drop price like 5,000 pips. All right, I don't want some crazy like that to happen. It can happen, by the way, but yeah, that's what I mean. All right, 20 pip trending stop is good. All right, 20 pips is good. All right, let's keep going. All right. Okay, this is a question for all of y'all. All of y'all here. And I want you to write it on a chat box, okay? Do you notice anything similar on these trades? Notice anything similar here? You can start in the chat box, all right? Just write your answers. I killed it, yes, yes, Mundo, but besides that, what do you see? Failed to take out failed to take out the high. Failed to take out the high. Okay, that's a good answer. Any other answers besides that? Just analyze the picture. Just analyze the picture for a second. Is there something there that that we've learned? I'll see M's on. Let's see. Okay, okay, they all passed. Briscoe, that's okay. Yes, it has to do with the moving averages. Yes, also falls move to the high, then drop. M's. Let's see what else they say. I see M's on optics. Okay, all right. Remember what I said about? Okay, we got one more answer. Let's see. The Mayo, yes, the moving averages also. So remember what I said about the moving averages, that they start confirming where you are in the cycle. Look at these. You have your blueberry on this one. Let's start from here. You have a blueberry, your Mayo, and your water here. Remember what I said? The fanning picture I showed you, they start getting like this. They start getting like this, and look, and also an M top. Whoever said an M top, good job. Price has been rising 1, 2, 3. Moving averages are all pointing like this now. And what did I expect? And then possibly an M pivot here somewhere. I know there was something here. An HOD, whoever mentioned that, good job. I think it was Danny. Yeah, good, nice one, Danny. So all these confirmations, moving averages, 3 days or 2 levels of rise, M, HOD, or a pivot. This is gold. This is gold. I took it with all the biggest lots my account can hold. I know it was like leveraged the hell out, but it was good. I knew I was positive. Look at this massive drop. Look at this massive drop. Beautiful. I even entered another late entry here, and I still profited because I knew this was going to keep dropping. I knew it. My exit was somewhere around here. Back into the range, remember? Let me get some of this. Back into the range. Remember what I said? 1, 2, 3. 1, 2, 3. Back into the range. Let's say the range is here. Back into the range here in the middle. This is usually where they end, in the middle. This is the middle of the range. Let's say okay, so to make it more simple, let's say for these 3 days, just an example, the ADR for these ADR. Okay, and by the way, ADR X3 on your indicator is how many pips it should be calculated for 3 days. Example, let's just say this one was 300. Let's just say this was the Euro USD pair, all right? So each day is 100 pip movement, right? So 100, 100, so 300, right? So what is 300 divided by 2? 150. So you expect a 150 pip drop